Hello and welcome as we are ending the 13th day of June 2018. Welcome to a silver chart update, seeing silver prices at 17 US dollars even at this time. The Fed's two-day meeting, which was held today, said the economy has strengthened significantly since the financial crisis and is approaching a normal level where monetary policies may no longer be needed to either encourage or discourage economic activity. The Fed now projects unemployment to fall to 3.6% in 2018 and indicated it will raise interest rates a total of 4 times this year as the Fed funds rate increased from 1.75% to that of 2. Now, it didn't take me long to realize that the Fed spoke today because late this afternoon, I happened to take a gander at the short-term chart and seen this wild move where you have this nice little uptrend, you come back to the band, you're back in here, really establishing a huge major resistance field, making it very strong, maintaining this uptrend, and then you have this big failed breakdown sale that has an immediate large gain that does not resist this point. Rather, it has a noticeable leg higher, not too big, not too small. What I learned from the three bears, this is a perfect example when trying to grade whether a leg higher is small, large, or just a perfect size. To me, that's a perfect size. And thus, instead of resisting an area where you're supposed to, it's supported it, and now it's supported it quite heavy, where it's also resisting this area quite heavy too. So if you really want to short-term trade this, you basically put buy orders in here and sell orders in here. And we're going to talk about that in this video right now. And we're going to do so within, we'll use the 3-hour time frame. Move the drawing tools for now, and we're going to add a lot more towards it. 3-hour time frame. Let's do 400 minute instead. So it's been a choppy overall market, but when we're talking about this, we're talking about noticing that a market is in a trading range. Now, if you're just playing the basic buy low, sell high, and just let the market do what it does, it's all going to work out towards such, and you're going to figure out where to buy and sell based on market activity. For if you were to sell here and then buy back again here, okay, after all, you would have bought it back here. We say you want to buy at the matching low, and then it goes down in here, so you buy some more, and then maybe you sell some here, maybe you sell again here, and you're just going to play all of the swings. In this case, if you're selling at say 1670 up to 1690 without any type of leverage, you're only doing 1% or so each move, which can be done profitably. But of course, you'd be noticing that you'd get a whole bunch of buy orders and sell orders that would come into the market. And you get a good idea for where key levels happen to go, especially when you just look at after the fact. So you have this low, and then you have this high. Then you come back again to this low, to this high. Back to this low again, to this high. See, at this stage, you can already tell that the range game has been working. If you're buying a little bit extras, maybe you got more here, but if you missed it, this is going to be normal. You missed it, it comes back, so be it. You missed out an opportunity, not like anything was much different from where it was before when the price went down, say, 1% and then got it all back. But again, you can see the selling came in here, and then the buyback. And as we continue to move on further, we can see the markets having a significant area. So at this stage here, where do your sell orders come in? I would be playing this line. Buy orders. You can see that you should have bought here. And one possibility in here. So if you bought here, you sell here, as an example. And then this sell order should hit. It's close. And then it buys back in here. Then you're playing the range game, so it goes down. You know, I mean, you've already cleared this. This is like, it's like, oh my goodness, this keeps winning. I mean, you're only just grinding away at small percentage points here and there. Of course, if you can find ways of margin, you can increase that significantly. Of course, your risk in losing can be significant as well with such a play. But when we continue this even further, when you look at this line in here, maybe you miss it. If you miss it, then you're going to miss out on the buyback. And then you'd end up getting your sale later on this move that goes close to 17 in the 1680s. But your buyback comes in here again. After all, you're not changing your line right now. Now you might have changed it lower here just to match this. And if you did, you took a little bit of a chance to get a bit better of a swap, and it would have won. And maybe that's where you're like going to decide, because now you had 3 hits in a row at this 1628 mark. So obvious sale point in here would be a no-brainer. So you're not buying here. There's no chance that you can buy that. So you're not selling up here. But there's a situation where the market's changing. You're going to keep playing this range game until it either breaks it to the upside or breaks it to the downside. So I'm hoping in most cases there should always be some selling going on in here somewhere. Either you're sold on the way up, somewhere here, 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 anywhere. If you missed it or you tried to sell up here, then to me, you almost have to, it's not a bad idea still. It sucks to do it, but there's so many times within the cryptos where I've made the sales in here. I'm like, man, I could have got better, but glad I got it, and it works out. So anywhere, wherever it was that you sold here, in case this is a market change, it's very common to come back to where you came from to find support. So that's where you would place a buy order, which obviously is not going to sell, not anytime soon. In fact, it still wouldn't have been able to sell yet because the price action has just barely gone to 17. Where would the buy be? Well, as we mentioned before, you've had 3 consecutive hits at this line. So before you were trading this kind of move, now all of a sudden it's this instead. So your volatility is increased. That's it. You haven't increased your resistance volatility. Maybe maybe you could go here, but I would rather play safe, and I would most likely, if I was playing the range game here, look to sell at 16 2/3, and my buy orders would be 16.25 until the range breaks or the range levels numbers can change. So obviously a buy would be executed in here. And where are you going to sell? Well, we've already distinguished that you would probably be selling at this line. And sell order would be in. It had a little increase for what I stated before. Maybe it's a bit better of a play to sell maybe 10 cents higher and such. After all, if you could turn the percentage move now in 1666 and 1624 is just a little over 2%. And that's why fees is very important to calculate what your true percentages are going to be when you actually buy and sell to such. So there's your sell order. Again, worked out well. There was no need to go lower because it had one pierce below, it still was in the same area. This is basically 5 times in a row that support level at that number has worked. So you don't change it. And you're definitely not changing resistance here. So now we come into a situation where it's either you got it or you didn't. You can see that there's a chance as a trader within this range that you very easily could have missed. And if you've been trying to pick away at these higher levels the whole time, it's a no-brainer. You had no chance of getting that because the sell order didn't hit. But if you've been selling right where this line is, it did hit. Notice though at the low, this didn't hit the low. So there's no way you could buy that back. So you're still playing the range game. Either it hits that support line and you buy, or it breaks resistance and you're not going to be able to sell when it comes back there again. And then you'd have to sell up at this high in here, where it came from before, and then evaluate the market as it moves. So, technical speaking at this point, the market would be showing this type of indecisive pattern. Again, you are not selling at this stage. If you did buy successfully here, then you would have, but you didn't, we'll say in this example. And now we have got a situation where it's had several periods above this line. All of the great times where you've been able to trade back and forth and multiply and compound 2%, 3% moves over and over and over again has come to an end. But when you had this buy order in here done, that means, assuming you sold at, well, it doesn't matter where you sold before. And I'm going to remove all the drawings from now, and this was planned for me to draw this much on this video. Regardless of whether you sold here, you got the top, you sold somewhere on the way back down in here. This is where I would be placing a sell order. After playing all of these times at this resistance level field. And then as market movements go down and up, that's what to me, you don't care what the market does when you're playing this trading game, at least not for the short term. It's all about just playing the moves. If you sell here, back to buying here, or selling up here. And if it goes up to here, well, now you look to buy back lower. And if you ever get situations playing this, especially when you're doing tight spreads, because I've already talked about buying back and forth in the range, and you're going to leave ranges. If you consistently can get 1 to 3 sell orders and then 1 to 3 buy orders back, and you don't get a whole bunch in a row where you don't get like 20 of 24 orders being one side or another, you're in a situation where you get a lot at one time. One of the strategies that I like is wait to get decent buys or sellbacks. So the polar opposite's true on the buys. So if you have a situation where you just keep on selling in here, price gets up to 20 and maybe you had 8 of 9 or 9 of 9 sell orders in a row, then you want to buy a decent amount of them back at larger percentage moves that you normally do. So if you're playing 2, 3, 4% per move, then if you had, say, your last sell order, if you normally would play for a 2% pullback, maybe wait for a 4% pullback or a 4.5%. And then try to get as many of your upper sales cheaper than possible to just do better as a trader. And then again, same thing on the way down. If you have the markets like the cryptos are doing right now, just going down and down and down, and like myself, I've got a lot of different coins where it's like, oh, this is 5 buy orders in a row, or this is 7 of 9. Then what I want to do is, if I'm normally looking for 5% moves, then you know what, let's wait for a 10%, 20% move higher before I make my first sale. So play it for more of the aggressive moves, meaning if you're normally, say, buying at a 20 handle, and then you're going to say sell it or buy again at 18, goes to 20, and then you're just playing these types of numbers, which works out to 10%. If you buy a whole bunch and it goes down to 10, well, 10% would normally sell at 11, so why not try to sell at even 13? And then your buyback before that, which was, say, 11 and a half from before, maybe you might want to sell that for, like, say, 15 and a half. And then when the markets can settle in a little bit, then you can go back to playing your normal tighter spreads, where if you were normally playing 10%, then you go back to it after you were playing 15, 20% moves. But for myself, this is a homemade game. And what I like about it is you create your own rules given what what you're allocated or available to be able to do. So I've talked a little bit about my strategy, about buy low, sell high, wait for like when the markets go up, then I'm going to sell some, all that type of stuff. So basically, if the market tells me that the minimum code is supposed to be worth, say, 2.2 units, and I have something, my worst code has got 2.02, and my best one has got, say, 2.35, then I'm going to sell about 0.15 worth of the 235 to bring it down to 2.2. And for this one here, I'm going to buy 18 basis units to buy it up to 220. So in situations where there's bigger volatility, yeah, I'll wait. Instead of selling at 235, if I can get away with, I think I can get to 240 or 250 or whatever I can get higher, the best I think I can get, I'm going to try to get that. And whenever it's available to me, because it's already had, oh my goodness, when this coin's ready to go, it goes, then I just look forward to making those trades. And within the situation, I get creative with spots where sometimes I'll look at it and say, you know what? I have this coin that's supposed to be worth 2.2. But I think, I know it's worth 2.4 now. And I want to sell it. But I'm going to sell it all because I think this is going to go back down for a decent sized move. And I'll either be in cash, which is Bitcoin. I'll put it in either the Tether, or I'll buy something else with it. And then I'll look back. And oftentimes, I'll do this in situations where I'm most confident, so I've been doing pretty good at it so far in my game. But I'll see that, say I sold something, like Factom is one that I did, and I bought back a little too early. Because what I did with it was time for me, where the computer basically said number. Because I bought in here, it was telling me to sell here. But I was thinking, you know what? This is a perfect example of something that I feel is going to roll over. So why don't I, instead of selling, like, let's say 15% of my holdings, why don't I sell 100% of it, get something else, and then buy it back? Well, I bought it back in here. So pretty good, decent move. It was 190. I get the buyback at about 160, 165, I think, or 164 maybe. Might have been actually really where it was. But then this happens. I could have got cheaper, so I just have a normal buyback spot. Because if this was supposed to be worth, say, 220 units here, and it wasn't, but we'll just say, I'm using just mathematical numbers for this. So 159, now it's down to 140. So that's lost a little over 15%. So that would be 33 basis points on 220. So that would be 187. So I'd have to buy it up, or I did buy it up rather, to get it back to this number, and so on. Now ETC was one that I was considering doing the exact same thing with. Because what I did was I sold at the higher end of this range in here. I ended up selling 20% of the, maybe close to it, but 19% of my total Ethereum. Was that correct? 1 in 5? 1/5? Yeah, 1/5 of what I owned. And I ended up buying it back down in here somewhere. And I haven't made a trade since the buyback. But had I sold 100%, it would have worked out to be a mathematical better play for me to do it in here. So then this will be the end of the video, and I guess I'm going to entitle it in something in the range of playing a sideways market and crypto trading strategy update, because I didn't plan on finishing it off the way I did. I was just planning on talking about silver and its sideways range, and understanding that you're playing a range-bound market that can only either do one of three things: keep the range, break it down, or break it up. Break it down, break it up. Man, interesting. Take care. Bye-bye.